Hello guys, and welcome to a new deep value video. Today we're going to deep dive into the financials of PayPal Holdings Incorporated, ticker symbol PYPL. PayPal is a company operating in the digital financial services industry. As of the 30th of August 2024, its stock price stands at $72 and has a market cap of 74 billion. Moving on to some key valuation metrics, the price to earnings is 14.5, while its price to cash flow is 10.2. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 67.5%, while its bottom line has increased by 72.6%. In terms of earnings per share, there's been a growth of 84.2%. However, it's important to note the change in the number of common shares outstanding. We stand at 1.075 billion, reflecting a minus 9.5% change. Additionally, the interest coverage ratio is 15.11, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 1.24, and the long-term debt to equity ratio is 0.47, and also the overall debt to equity ratio is 0.59. Now let's transition to the cash flow statement. Cash from operations is 4.8 billion, reflecting a change over the past 5 years of 18.9%. Meanwhile, cash from investing activities is 752 million, showing a change of minus 113.1%. Furthermore, cash from financing activities is minus 3 billion, showing a change of minus 171.4%. And lastly, free cash flow has grown by 25.3% during the same time from 3.36 billion to 4.22 billion, and is projected to grow to 6.5 billion in fiscal year 2025. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The ROE is 20.1, the ROI is 17.69, the ROA is 5.3%, and lastly, the most important of them all, the ROIC stands at 12.5, a crucial metric for understanding the effectiveness of a company's capital allocation. Finally, let's find the acceptable buy price. The first method is conducting a DCF analysis by using a discount rate of 10%, a revenue growth rate of 6.5% for 10 years, and a perpetuity growth rate of 2%. We get a fair value of $110.1. Secondly, using a multiple valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times free cash flow, we get a fair value of $125.14. Finally, the analyst price target is $75.96. Putting it all together, we get an intrinsic value of $103.73, and using a 50% margin of safety, we get an acceptable buy price of $88.17, suggesting that the stock at the current levels is undervalued. To wrap up my analysis, I rate PayPal as a buy. Personally, I see this as a great value play, and also I own PayPal stock, so I urge you to do your own due diligence. Thank you for watching. If you found this video helpful, please like and subscribe for more deep video analysis. See you in the next video.